and welcome everyone to the first in the series on blockchain, where we are going to focus on everything related to crypto, DeFi and NFTs within Luxembourg and beyond. For this first episode, we will focus on the evolution and adoption of cryptocurrencies and digital assets within the world of financial services. I believe the discussion will focus on crypto as a mainstream payment and investment tool for institutional investors and fund managers, the adoption of crypto by banks and financial services stakeholders, and then also a look at the involvement of the regulator and their perspectives, both in Luxembourg and beyond. Coming up in the second episode, in a week or so's time, we'll look at the evolution of blockchain technologies and the future of decentralized finance. DeFi as a new driving force behind asset and wealth management, and ways to secure and ensure scalability and adoption. Finally, the third in the series, with the details to be confirmed over time, but will focus principally around NFTs. I hope you'll agree, and the fact that there are quite a few of you on this call today, that this is a really prominent and exciting topic, both for Luxembourg and for broader financial services. I know I'm excited to hear this discussion today with this list of esteemed speakers, and I hope you are too. I will now hand over to Thomas Campion, a digital asset leader from PwC, to take charge of the discussion and introduce you to our wonderful guests. Take care, and I hope to see you all soon.
Thanks, Nazir. Many thanks for this introduction. Super happy to be here for this first installment of your new blockchain spotlight series. I mean, obviously, today we're going to discuss crypto, and I think that this kind of session are super important because let's face it, crypto is a passionate topic, but still it faces many misconceptions, many contradictory signals, many polarizing events, and all of that is creating confusion amongst all the people who are not spending their time 24/7 on the topic, and they are numerous. And if you are not comfortable, this is very difficult to engage. So this kind of session is super important from that perspective. So very briefly about me, for those who do not know me yet, and among you, most of you might have been fed up to see my face so many times around the last couple of days. Thanks for the very good work of the Loft in terms of communicating around it. So my name is Thomas Campion. I'm a director in PwC Luxembourg, where I lead the blockchain and crypto asset topic, cross industries and cross line of services. Been in the firm for 13 years now, and really passionate about this underlying topic. But enough about me. There's no need to say more. I have a great panel today, and even if they are extremely well known and recognized in the respective area of the crypto space, I think it's important for them to briefly introduce themselves. And we're going to start with the only lady that we have today, Nadia. If you don't mind, can you introduce yourself very briefly? And thanks for being here.
Yeah, thank you, Thomas. Thank you for the introduction. Good afternoon, everybody. Very happy to be here and having engaging in interesting discussion with you, all of us. My name is Nadia Manzari. So I'm partner and a lawyer at Shields & Shields now. But I was at the regulator for 17 years, and that's where I got in touch with crypto, and I also got in touch with a few of the panelists here. And it was where I was at that time dealing with the question, shall we regulate crypto platform and crypto exchanges or not? And as you all know, Luxembourg took the decision a few years ago to do that, and we have two very famous platforms now here in Luxembourg. And so we are going to approach the question of regulation afterwards, and I would say there are also positive and as well negative aspects, but we will discuss this afterwards. So thank you.
Thank you, Nadia. Thanks for being with us. JB, you want to go next?
Yeah, sure, Thomas. Good morning, good afternoon, everyone. Very happy to be here, and very happy to have Bitstamp today. So my name is Jean-Baptiste Graffieux. I've been in the crypto space since 2014, so it's about 7 years now. And we met Nadia at the time, applying for our payment institution license. I am now CEO for Bitstamp Europe, and really looking forward to the session today.
Thanks, JB. Thank you for being with us. Rob, you want to go next?
Thanks, Thomas. It's a pleasure to be here today. Thank you also to the Loft for organizing this very interesting panel with such excellent panelists. I'm Roberto Machado. I'm the General Manager of Cypable Europe. We are a custodian technology provider for enterprise. We're providing custody technology for companies. I have 10-year experience in digital payment and cybersecurity industry, and I have been in the crypto space for 4 years. So it would be a pleasure today to be discussing this, to be sharing this panel with everyone.
Many thanks, Rob. Thanks for being with us. And last but certainly not the least, Rick, you want to go?
Hi, thank you for introduction, Thomas, and good afternoon, everyone. This is Nadia Manzari from Bitflyer Europe, and I'm very glad to be here today. And I joined Bitflyer back in 2015, and we opened our European branch here in Luxembourg back in 2017, and we also received a license from Financial Ministry Luxembourg as a payment institutions. So yeah, I'm very looking forward to speak to you here. Thank you.
Thanks for being with us, Rick. All right. So that being said, let's kick this off with our first theme. So crypto as a payment or an investment vehicle asset class. Let's crack this, and we're gonna start with an easy question to warm us up, and it's gonna be a question for the four of us. What is, in your opinion, the key trends that you currently see on crypto from a payment standpoint and from an investment standpoint? Let's maybe focus on 2-3 key trends for each of you. And again, maybe Nadia, if you don't mind, you can start. Ladies first. Yeah, it's not going to be ladies first for each question.
It's going to be me all the time.
No.
Okay. Now, what about the main trends? What I see, what I have observed over the last year, I would say, is that we have an increasing institutional adoption of the crypto assets and the crypto ecosystem. We see more and more institutional players who are allocating more and more capital to this area. So that's a general comment, I would say. On the DeFi side, we also, Nazir also mentioned it in the introduction, we can observe a very important growth also. And NFTs, something I was maybe quite skeptical on some time ago, are also developing significantly. So what I realize is that it's somewhere exciting at every level of the crypto space. And of course, now, not talking about cryptos, we also see now central banks getting more and more interested in it by developing their own coins and their own currencies. So I would say it's quite interesting and thrilling at every level. So maybe I just hand over the floor.
Yeah, no, but that's interesting. Well, the repositioning of the whole financial sector is super interesting. And I mean, I join you with the fact that NFTs and DeFi, at the end of the day, it would even make Bitcoin looks like it's a dinosaur at the end of the day, whereas we only start to adopt Bitcoin at a high scale. All right, thank you. We want to go next, maybe with different trends.
Yeah, sure. I can go next. So for Bitstamp, what we are experiencing at the moment is it's a huge demand from institutional clients. It has been ongoing for a little while now. But at the same time, very interestingly, we see some early mass adoption from retail users. We serve today like 4 million clients across the globe, but it's true to say that institutional clients are mostly making our volumes. We have between 1 and 4 billion of trading volume every day, and the institutional part is representing a large portion of it. After looking at different countries, it's interesting because in Africa, for instance, you will have some key countries where crypto is used more for payment transactions and not necessarily for trading investments. But I think in Europe, in the US today, this is mostly used for investment, for trading. So that's basically the trends that we are experiencing on our platform today.
Thank you, Jibe. Rob, anything to add?
So I agree. I think with Nadia, we've seen a great difference from our perspective in terms of regulatory compliance. We're seeing that regulators are increasingly involved in this space. This is giving great certainty to institutional players. This is, I think, long gone are the days of the shady ICOs, and now institutions, serious companies like all present here are trying to build this new economy, right? So of course there are new products that keep appearing, DeFi, NFTs, and new economies built on top of those. So I think this kind of institutional trend, these kind of more serious players into the market are one of the, I would say, most clear trends there. And we are seeing recently a big push again for payments. Payments come and go. Bitcoin is a payment platform, but it never seems to take off. We are seeing a big effort recently with layer 2 infrastructures to go and solve the current problems. So I think payments is going to be the next big thing for crypto as well.
Yeah, and we'll come back on that layer 2 solution, because again, one of the misconceptions is that, yeah, not only it's slow but it's expensive to pay with crypto. This is one of the misconceptions we're going to tackle a little bit later. But maybe Rick, before moving on to the next question, anything to add?
Sure, just adding a few points to the points there already mentioned. So in addition to the institutional trend, but if we look at the non-institutions, the demographic of the new entrants, the new users for this industry is shifting towards more younger generations. Mm-hmm. And then the most important, most interesting thing is their perception of crypto investments. It used to be more like a speculations a couple of years back, but now they started to consider this as one of the new asset class, and then more intends to invest in a long term. So not in a short term buy and sell, but more like having a long term. So this clearly indicates that the crypto is becoming, or even already established, its the position as a new asset class, which is a quite interesting move. And just adding another point to what Robert mentions, the El Salvador case is also quite interesting. So that's going to be a very interesting topic around payment.
Yeah, definitely made history. Yeah? Thank you, Rick. Well, okay, so I think that we know all warm up, because that's one of the objectives of today. By the way, I didn't mention is that we're not going to avoid a topic today. We really want to talk real somehow. I was mentioning many misconceptions, so let's dig into it. With the first one, I mean, volatility. I mean, every time you talk about crypto, the second question is about volatility. So let's crack it. Volatility is often cited as a major roadblock for doing business with crypto. Some would tell you, and including myself, that vol is probably a market feature. It's a crypto feature, at least for some of them, rather than a bug. But opening up for your view, would you see a kind of an upcoming polarization where cryptocurrencies, which are by design a little bit more volatile than the average, be considered more as an investment, the so-called new asset class, and then having maybe stablecoins and CBDCs tomorrow being more used as a mean of payment? Would you see this kind of polarization happening or not? And maybe suggest we start with you, JB, on that.
Yeah, sure. No, not absolutely, Thomas. I think, back in the days when crypto was born, so like only 12 years ago, basically, it's true to say that at the time there was no mechanism really, to prevent from volatility, and it's true to say that at the time there was no stable coins in place. Now with stable coin in place, this is a very nice mechanism, for investors or even individuals willing to make payments to be protected in period where there is a high volatility on the market. So I think also from an institutional standpoint, it's true to say that we see more demand and more traction, but from banks, from brokers, from family offices, looking for diversity and in terms of investment to take a bit of potential risk on crypto, and this is purely more for investment on trading purposes. At the same time, what we see more on individuals, so more people exposed to crypto every time there is a volatility. Today they feel much more secure, which is probably enabling some sort of mass adoption, for crypto users, where in very difficult situation when the market is going down, they can turn to stable coins to protect their assets. And so I think this key component or mechanism at the moment is really helpful to facilitate the mass adoption on the market. So that's what we're also experiencing on Bitstamp today.
All right. Yeah, I agree with you. There is kind of a complementarity between the two. You just need to understand where and when to use them. Rick, maybe a few compliments on that. Anything else to share?
Yeah. So from the volatility point of view, the interesting way of looking at is, for example, USD or USD stable coin is stable in short term, but in long term maybe devaluate. The Bitcoin crypto, short-term volatile, but long-term gaining values. So even from the asset class point of view, probably it's interesting. Well, it's worth having both of them in the portfolio. And regarding the question about the polarizations, the crypto more for asset class, stablecoin, CBDC more for payment, probably yes. But at the same time, this kind of polarization, like this way of looking at this, may be misleading, may kind of cause some, like it causes some missing view on it. What I mean by this is the blockchain cryptocurrency is not only that, and just like the gold is not only an asset, but also plays an important role in the industry by a lot of machines, etc., etc. The crypto itself plays a lot of role in addition to the asset class and then also payment. So from public perception point of view, people should start understanding that it's not about payment or investment. It's something more than that.
Yeah, it's more comprehensive than that. I agree with you that there is a very short-sighted view on the use cases at the moment, even if things are improving. All right, thank you very much. Well, then let's move on the difficult questions, because as I said, we don't want to hide behind anything today. So let's tackle this energy consumption consideration. Obviously, it's another hot topic, creating intense or passionate debate, name it as you want. So my question for you, and it's going to be for Nadia and Rob maybe, is indeed crypto responsible for global warming, or are we actually having a very short-sighted view here?
It's quite complicated to say. I would say at this stage it's still a short-sighted view because according to me, you cannot really energy consumption on its own is neither good nor bad for climate from a climate perspective point of view. And I just recently read a study of the University of Cambridge which says that of course the electricity comes to consumption index, according of which the global Bitcoin network currently consumes about what they say as much as the nation of Finland. This study also says that the consumption as such does not tell you much about the carbon footprint of the Bitcoin activity. So you have really to according to that study, you really have to geolocate the mining activity. You have to look where they are mining from, and statistics say that almost 62% of the miners, they rely on hydropower, more than 30%. Of course, also rely on coal, but others and 39 to 40% rely on a combination of solar, wind, or thermal electricity. So, what I would say is it's just sticking to the carbon footprint is maybe not the right way to do it now. Now, it cannot be denied that, of course, the carbon footprint might not be created at the moment. But on the other hand, and I think you're all aware of that, progresses are made in the sense to have a more climate-friendly Bitcoin mining activity. And as for every technology or for every new product or services, they are meant to evolve. And I would say that they might positively evolve in that sense too. So that's my meaning.
Yeah, no, fully with you on that. I mean, there is a clear confusion mixing up things between energy consumption, carbon
and climate, yeah, of course.
On one side, and then well, as you said, everything is consuming energy. Let me maybe remind you that, and that was an interesting data point I discovered lately, that when you drop an email to your friend for a lunch request, and we do that all the time, 1 billion times per day, it's consuming the equivalent of an hour of a light bulb. So if we start looking at things like from a pure energy consumption, then we are going into trouble, obviously.
Yeah.
Thank you, Nadia. Rob, anything to add on that?
I greatly agree with Nadia's views. I think it's kind of this statement of saying that Bitcoin is causing global warming is misleading and potentially misintentioned or with a bad intention behind that.
Yeah.
Definitely, this is a new technology. This is new ways of using electricity. Again, how the electricity is produced for that consumption is the big question. But comparing it with heavy industry, car industry, email industry, right? We should see what's the global the footprint for that. And essentially, we should definitely monitor it and before it's too late. So it's good to have this monitoring view here. Be aware that this might have an impact, even if it's not as direct as some claim to be. And I totally agree with Nadia that there are few improvements and efficiencies that are being developed now in the space. So from proof of staking instead of proof of concept to layer 2 optimization of the transactions, these might have a positive impact on how how this is somehow influencing the climate change, right? So it's not a big yes, it's not a big no, it's somewhere in between, as typically happens.
Exactly. That's the fact that the reality is far more nuanced. But we must be careful because, very quickly you have this mindset and this perception that crypto, because all crypto is considered as being proof of work based by the first, and then all of that is incompatible with ESG, and then it creates structural issue because we need to change people's mindset. So it's super important. But yeah, energy consumption, we could spend hours on that. Thank you very much for your input so far. I suggest we switch and we move on to the next theme of the day, which is adoption by banking and broader financial sector, and tackling another difficult topic, which is all around AML concern. Again, very, very often cited as major business risk whenever we talk about crypto, which personally seems to me very disconnected from the reality. If I would need more than time we have today to explain the lengthy onboarding process that you have to go through on a regulated crypto exchange. I mean, even my finance department are amazed. And you combine that with the very strong performance in terms of transaction monitoring abilities that goes way beyond what you can do with cash. And so there is, to me, kind of a disconnection, a perception gap there. And again, we have two crypto exchange here today, so I would like to get your view. JB first, maybe, and then Rick. What do you think about that?
Yeah, sure. No, absolutely. I think that there is a perception where crypto exchange do not have necessarily AML controls in place, but we are regulated. We are subject to the same regulatory framework and AML laws and regulation and directives as a bank, for instance. Such as a bank. So for us as a crypto exchange, there is no difference. We are enhancing on an ongoing basis compliance programs, ML controls. For Bitstamp, we have a strong team of 80 individuals working on compliance to serve all of our customers in the world. We are, using the same type of software, as any other players in the financial sector to do sanction screening or transaction monitoring. So I think that there is a little bit of perception, but really we are as strict as a bank can be, on onboarding clients and developing a package of controls to make sure that we can comply with the requirements. I mean, if I look at my colleagues, they come from Big Four, law firms. They've been working in banks in the past, so we all talk regulatory the same language, and basically we have this package of controls they ready to comply with the regulation. And I think you're right, there is a misperception, and every day we try to clear it. And when we talk to partners, from the financial sector or prospect, I have to say they are quite impressed or surprised that we are first as regulated as them, but also that our controls are very, very strict to comply with the regulation.
If I may add something to that point, that was the first objective when we decided in Luxembourg to regulate the platforms. That we of course we didn't decide that from one day to another, and we did an assessment. And while doing this assessment, we realized that AML was one of the highest risks, and that was why we decided to go for regulation and to put you on the same level playing field from that risk perspective. And of course, that is really a misperception, and I can confirm that you have the same obligation than any other financial actors with regard to AML and KYC.
Yeah. Thank you both. Rick, anything to add briefly on that?
Yes, mostly spoken by JB and Nadia, but the one of the important thing is regardless of the industry, it's not only about the crypto, but technology always evolves and regulation needs to make a catch up as soon as it can. And especially in the AML world, the fraudsters or money launderers, they're one of the most creative and very smart people who try to do bad things. And the regulations, or even the players like us, especially the exchanges, which is a gateway between the crypto and fiat, we have to always, try to be more creative than those fraudsters, and then think about the new evolution, how to make a proper control over those topics. This is a continuous effort that we have to continue. So just wanted to emphasize that point.
Yeah, no, I agree. It's a work in progress, and we still have a lot to convince, let's say, but the idea, the core idea is already there. All right, thank you. Let's maybe now take a step back. Question for you, Nadia. I was mentioning initially during the intro that we were seeing this kind of repositioning, not to say change in mindset, from the broader financial sector on crypto. I think that 5-7 years ago, there was a kind of a pure rejection of the topic for numerous reasons. We see, I mean, on a daily basis, there's kind of a race, a crazy race amongst traditional players, traditional asset services to start those crypto product or services. When it's not Fidelity, it's State Street, or it's BNY, or the list is very long. Do you have an idea of how to explain this change of overall mindset?
Sorry, so we already said in the beginning, and I think Rob said it, that we see that institutionals are adopting it increasingly and increasingly entering into the crypto space, specifically also in the asset management industry. And as Rob said, of course, the first, I think one of the elements is that there's progressing adoption of all these services and products by the consumers. That is one point. Maybe, compared to 10 years ago, I still remember the times people told me, "What are you dealing with? Strange things. It's a bubble. It's not gonna work. It's not gonna stay." I found it at that time already very interesting and exciting, but that's just a side remark. What I would say, people might have understood that it's something which is here to stay, maybe more longer than they expected it to see being here. The second point is, and that's what MiCA also mentioned before, and that's what I as a regulator also observed, and now in my current practice too, is that as we are progressing, as we are developing the process, and in Luxembourg, for example, requiring the platforms to put in place AML tools to do screenings, and with these requirements, the technology and the products, of course, evolve. And so today, the products are completely different than 10 years ago. And we also mentioned that we have the proof of work, now we have the proof of stake. So everything evolves. So when I look at the first blockchain and Bitcoin 10 years ago, it's amazing the evolution it has done. So that's the second point. I think consumer adoption, great evolution, very positive one from a regulatory point of view. And of course, the future regulatory clarity is also supporting it. As you have seen now at EU level, at Bank of International Settlement level, everybody, there are proposals to get the crypto assets a bit more regulated, to integrate them in the current financial services or in the traditional financial service, or to align it to the current services we have. So I would say that are the main reasons for this increasing adoption, and it's just gonna.
Yeah, no, it's a very good depiction. At the end of the day, when there is a will, or at least a need, there's a way somehow, and so people are getting more and more comfortable. But your point on regulation is a very good transition, because I'm being told that we have 10 minutes left. So I suggest that we move on the third and last topic, which is about financial regulator perspective. Are they on board? So it's going to be a question for you, Rob, and we're going to try to mix with the previous one that we were supposed to tackle as well. I mean, if I have to make a very basic summary, many would consider that crypto must be regulated, because it's the wild west, to make it short. A counter view could be that, well, Bitcoin is working like a clock since 12 years. It has never been hacked. It has never been any downtime. That DeFi has demonstrated effectiveness. So my point here, isn't there a kind of a contradiction? Isn't it the cyber risk, hindering a kind of a clear perception on crypto? First question, and sub question, Rob. I mean, obviously, whenever we talk about traditional crypto, we have all those considerations around the risk of losing access to those crypto, losing your private key and so on. And custody solutions are super important there. And regulation tend to focus on making sure that you do not lose your access. A solution like yours might be something that you want to elaborate on there.
Absolutely, thanks, Thomas. So I think regarding the regulation, I think it's very important. And when we were saying what are the trends, I think I mentioned that regulation now it's here to stay, right? And if we compare how how the crypto industry was like 5 years ago, no longer than 5 years or 3 years ago. We are now all the serious players, and we filter out all of those Wild West players, or many of them, right? And now there are serious companies who are actually building that economy. So regulators are actually kind of a driving force for that institutional adoption, thanks to this kind of creation of a space where serious players can actually build that new economy, right? So that's, for example, leaving, I would say, leaving all of the bad players away from this new economy we are creating, or at least create economy without them, right? So that's the whole driving force that regulators are bringing. Regulators, of course, rely, major financial players rely on regulators to enter into the game, right? So regulators can't play with the regulator trust and can't play with the financial institution trust. That's kind of the goal, the most, I would say, valuable asset for those financial institutions. So the regulator job is very important. They can just jump into quick conclusions. That's why I understand that regulators always take a bit longer they go a bit behind of the technical developments, but I would say the importance of their job is essential for I would say the establishment of the crypto technology as a means or as an economy itself, right? And regarding the second question about the custody, how this is important also to the kind of adoption or creation of this economy, right? I like to think about the custody. Not only traditionally, custody has been at the perception of how we safekeep the private keys, how we safekeep the assets, right? I like to see the custody as a port. So blockchain is essentially a sea where you can do many things, but there is an access port to that blockchain, right? And custody is actually taking care of the access through that port. So other than is dealing with I would say, the essential risk of blockchain. So this is the ownership risk, for example, and the transaction risk. So dealing with those two risks through transaction monitoring, asset safekeeping, policy enforcing, it's the key core of custody, right? So strong custody also helps to this strong adoption by institutions.
Yeah, definitely. It's a key pillar. And just to come back on the regulation at macro level, I mean, many perceive regulation as not an issue, but maybe a potential for reducing level of innovation in crypto and so on. I would rather perceive it as a way to it's legitimacy on crypto. If you regulate something, it means that it's meaningful. Otherwise, you just don't care and you go next. So I think that we should also change the approach on how we perceive regulation. And thank you for that, Rob. Maybe coming back now to our two crypto exchange in the panel today, and talking about regulations, we cannot ignore that there's a kind of a regulatory arbitrage that is happening in the crypto space. Obviously, Luxembourg is doing a great job at regulating crypto exchange like you, but crypto asset service providers or anybody in the business of crypto. But still, that compliance, those cost of compliance might create some competitiveness issue towards the rest of the world, or some players established in region where the regulatory burden is less intense. So question for you is, given the global footprint of crypto, shouldn't regulation be global or known, or something in between? What's your view on that?
Yeah, sure. So I think, Thomas, for us, and just one point on the previous question is that being regulated is helping us to develop business relationships with some key actors that we would never serve if we were not regulated today. So I think we are very supportive of having exchange regulated, and what we are observing today is that in some countries or across the globe, there is, maybe the level playing field is not, in place. And of course, in Europe, we are, Bitstamp is very regulated, if I can say. But it's true to say that some other exchanges are not necessarily, playing the same rules or going into the same regulation direction. But at the end of the day, I think we are very pleased being regulated, especially in Luxembourg. Having been here now since 5 years as a regulated entity, and I think Luxembourg has probably at least 7-8 years of experience in crypto. And please remember that the ecosystem is only 12 years old, so this is a massive experience. And I think we are very pleased to be of course regulated in Luxembourg. But to your point, effectively, it would be much more powerful to have more level playing field or some sort of global regulation, and not just in Europe or in the US and in some countries in APAC.
All right. Thank you, JP. Rick, anything to add on that?
Yeah, so the level playing field is something we really need. And sometimes the regulated exchanges like us feel a little bit frustrated by some of the players not really following the rules. But putting this aside, some of the risk that exists in this industry, or some of the risks we need to manage, one of the most important among them is the AML, anti-money laundering. And then by nature of the crypto, and then also by nature of the money laundering, this has to be globally managed, because the one regulation only exists in certain jurisdictions doesn't really help, because by nature of the crypto, there's no boundary. So having said that, as an industry and then also the regulations, we have to face it. The technology evolves, and there needs to be something in place to manage the risk globally. This is a whole new layer of challenge, but I would say we have to face it.
Yeah, no, I fully agree with you. And I can see that I would have been very happy to ask my last question, but I'm being told that the quiz will start in 2 minutes. So under the control of Anthony, I don't know if you can hear me. Do
Yes,
we have
please.
time for a last minute, for a last question or no?
Yes, sir. Please go ahead, Thomas.
Okay. So one last and open question for the four of us, still in the regulation area. So we know, I mean, since more than a year ago, market in crypto assets and the pilot regime regulation have been publicly issued. They are still under legislative process, and we cannot ignore the fact that they might run the risk to be outdated when they will be applicable finally. We have the SEC in the US that keeps pushing back ETF approval. We have the unfortunate and 12th ban in China happening. So in September this year. So open question, are regulators struggling to cope with crypto? Or what is it about? What's happening somehow?
I maybe take this one as a first, but I want also to jump back on the other question. I saw a few exchanges coming when I was in my former life, and all the ones who wanted to be regulated and who were eager to be regulated are still there today and are famous. And the ones who complained about regulation, a lot of them don't exist anymore. So I would say it's also, that says everything. So on the regulation here, that my answer would be brief and short. It's not only the case for crypto. I think it's as soon as product and services are technology bound, and for every other service, I always realize that we are as regulators or the regulators or we as regulators are always running a little bit behind. And that's something normal. I just take out of the crypto space, the payment space, PSD1 came in place, and we were already talking about PSD2. PSD2 was not adopted yet, and we were already talking about PSD3 and standards of API and security, additional security. So for me, this is a current, it's a normal way of proceeding. That regulation is always a few steps behind. Not too much, but a few.
Thank you, Nadia. Anyone else to share a final thought on this question?
Yeah, I totally agree with Nadia. I think, of course, regulators are behind because of their way of working, right? They can't go at the same speed as the technology. Innovation is always that, innovation, always one step ahead, right? So regulation needs to follow up because, again, they're playing with the reputation and with the trust of all of the economy that is built behind them, right? So there is a global coordination there. We see that regionally there are like sandboxes, there are pilot proofs, but in the end, this needs to be coordinated globally at some point, right? So of course that takes a big effort, and
it's inherent to regulation also. You cannot regulate something which is not there yet or not existing. So you at least need to give it some try and then apply regulation if needed.
And in that direction, if we see this also with the technology itself, right? If you need to adopt all of the technologies that are being offered, how do you filter those who are going to remain and those who are going to fall? So with laws and regulations, I understand that happens exactly the same way.
Very good, very good.
Thank you. Okay, I understand from Anthony that we are slowly but surely getting to the end of this conversation. So maybe shortly to thank you all for this very fruitful conversation. Obviously, we would have needed an afternoon to tackle the optional questions. So potentially for a second session. Thank you all. Thanks for the public for his attendance, and hopefully you enjoyed the session. Thank you very much.
So now, of course, we want to see whether you all have paid attention to our dear speakers. All you need to do is to put your first and last name in the access link that has been dropped in the chat room. The best scoring person will be able to have a mentoring session with the person of your choice. Please drop your first and last name in the access link below. Oh, we already have our first candidates dropping in. We're going up to 10. Okay, you got 10 more seconds to subscribe. Let's go. 12 candidates. Let's go. 7 more seconds. We are starting the quiz in about. Let me give you 8 more seconds. Okay. We're hitting the 30 people mark. Let's go, guys. 5 more seconds. 5 more seconds. Very good. So we start in 5, 4, 3, 2, 1. We start in. Wait a second. And here we go. You got 90 seconds. Marie is leading. Mr. John Torres first. Roberto, you're cheating. Roberto, you can't. You were speaking, you are cheating, you can't.
That's not me.
Oh, damn.
There's another Roberto in the room.
Another Roberto. Michele Salvadori. Okay. Michele is on top. Okay. Somebody really wants to talk to you. You got 40 seconds left. Oh, Michele has paid attention. He has paid attention. Roberto, followed by Roberto. Okay. Ajinkia, okay. Oh, Michele can't wait. Michele can't wait. 15, 20 seconds left. Michele, Roberto, Andy. Oh, Mr. Bryant. Mr. Bryant. Okay. 8, 9, 7, 6, 5, 4, 3, 2, 1. And the winners are we got Mr. Salvadori. Please unmute and introduce yourself quickly. Michele, please introduce yourself quickly.
Hey guys, sorry, I'm trying to switch on the camera.
Yes, let's go. Who are you?
Hello.
Introduce yourself.
I'm Michele Salvadori. I'm a compliance manager at Bitstamp, and thanks for the very good discussion today. That was very helpful, and looking forward for next sections.
Very good. To whom would you like to talk to? Except to Mr. GB.
I would like to talk to Nadia if possible.
Very good. Very good. Nadia, is that okay for you? Is he allowed to talk to you? Very good.
Fine.
We'll do a follow-up chat after. We'll do a follow-up on that. So now we are coming to the hard part of this whole session. What I'm going to do right now, I'm going to open up 2 breakout rooms with a shared screen and a few instructions that I'm going to share with you. So all you need to do is to accept either W1 or W2. W1, how to set up a regulated crypto business with Miss Nadia Manzari. W2, how to secure your crypto assets.
We took the decision in Luxembourg at that time to regulate them. What the first reason was we identified it as a financial activity, specifically on the payment side. The other reason, of course, was AML. And the third reason, which has not been highlighted, I would say, during the panel, may also be level playing field. If you have providing financial services, and that's also now for all the new services coming up, even though the product as a such, or I don't even want to call it underlying, but the technology is different, the layout is different. Still, most of the services still remain financial services. So why shouldn't they be regulated? The objective of the financial sector is always to have a playing field, to have consumer protection, investor protection in place. And that's one of the reasons to try to get them in a framework. So now I'm going to share the screen if it works. Yes, it works. So on the
Sorry, we want to make the session as interactive as possible. Please don't hesitate to drop all of your questions in the chat forum. Thank you.
Yeah, but if also you wanted to ask questions, don't hesitate to because it's going to be otherwise quite a monologue for me. So so how to set up a regulated crypto business? I can talk from my experience, as I said, which I had 5-6 years ago. But beforehand, things are different now already, because as we said during the panel, regulation is coming up, and for cryptos, the first regulation has come up already 2 years ago. It has been discussed at European level and introduced in national legislation. I suppose you're all aware that if you want to provide crypto services or virtual asset services in Luxembourg, you have to be registered with the CSSF. This is not a license, of course, it's a registration. And again, here, the first objective of this registration is to get you under the AML framework that you properly should identify your customers and your transaction, and to do the transaction monitoring correctly in order to avoid to be used for money laundering purposes. So that's, as already Matt said, a very important aspect. So as soon as you are providing services in that space, you have to ask yourself your questions. Do I need to be registered or not in Luxembourg? It is a registration country by country, so it's compared to most of financial services where you are benefiting from a passport. Here you really need to register with the country, with the authority of each country you are providing these services for. And then, and it is as said, it's a registration, not a license. So that's very important to mention here. But it's the first step when you are in that space. The first question you have to ask yourself is, am I providing the services which I need to register for? The services which you need to register for are, listed also by the law. So the list is there, yeah. And so if you are in trading, if you have 1, 2, 3 assets which are representing digital representation of a value, including virtual currencies, Bitcoin, and so on. If they are digital, tradable, or transferred, if they can be used for payment or investment purpose. So you have to ask yourself your questions. Payment purposes, they are out, of course, because they fall under the payment services law, and electronic money and financial instruments. Also, they are also out. They fall under the existing. If your service or your product is already to be defined as a financial instrument, it is now more and more confirmed that you then fall under the current legislation for financial instruments. So that's the first step. So I would say it's for every service in that space you would like to provide to the public. It's the first assessment you have to do. Then the second one is if you try to define your business, and that's what we did at that time. We identified at that time, and I take the example of the crypto exchanges. We identified if there was somewhere a financial activity, and at that time the regulators and Luxembourg in general decided that the crypto space could not be regulated at that time because it was unknown and quite complicated to get into the space to regulate it. But in the service provision, there were financial services included. So you do not only have to identify the product or to assess whether your product as such is a financial product, but also the services linked to the product could be identified as a financial service. And that's what happened with the crypto exchanges who are providing wallets where the consumers or users can load fiat on, and in order to do the exchange of crypto or to buy cryptos, and so on, taking this away. and that's what happened there. And here a financial activity has been identified, which was not directly linked to the crypto or the Bitcoin as such, but which was in the service provision of the activity identified. And that's why at that time the decision has been taken by the regulators that those exchanges need to be regulated, because they are providing payment services, they are intermediary in a service, and that's why and that they are also onboarding customer funds. And at that time it was PSD1 who was applicable, and the law of payment services in Luxembourg, of course. So it's really a whole assessment of the business model. It's not just only an assessment on the product, but really on what kind of services are linked to it and what kind of services are you providing out of it. And that's all has always been reiterated by the regulator. So the principle is, if you're providing a financial service, you have to be regulated. That's in the law, in every financial sector law. It is said that you are not allowed to provide a business activity, which is a financial sector activity, or connected to it without holding a written authorization. Not anymore of the Minister of Finance in Luxembourg, but since last summer, the authorization will be given by the CSSF. So the whole process is now with the CSSF, and you have properly apply there, or at least engage in discussions with them if you are not sure if your product or your service is a financial activity.
Nadia,
yeah.
don't mind taking maybe one or two questions. So we have
one
from Auban Deramo. Are NFT exchanges also in the scope of this regulation?
So that's a very good question. So if it really depends how they are operating, but I would say, and I would apply here the same reflection or the same strategy we applied at that time to the crypto exchanges. The NFT as such might not be to be qualified as a financial service at this stage, but if you are setting up your business model in a way that you are providing wallets or payment accounts or accounts to your customer, where I can, as an actor A, put money on, and this will be then transferred to user B, and vice versa, and I have an amount of money which I can keep on that, keep on that account in order to do my transaction. Depending on how your business model is set up, and if you are providing and if you are entering into the possession of funds, it is really possible that they might also need to apply for a payment license. Yes, but that's a good question, and maybe to show you how it works.
Yeah, we also have a question by Andy, Mr. Andy Pan. Is it possible to regulate decentralized P2P exchanges?
P2P, so when I directly transfer the money from A to B without having an intermediary in between, is that the question?
Andy, please unmute yourself. Yes.
Yeah, normally direct transactions, where there's not an intermediary intervening and the funds are not, but that's really very specific cases, and it rarely happens because somewhere in the process there is always an intermediary hidden at the moment. But if you construct your business model in the way that you don't need to transit or to pass your fund flows through another intermediary, or you are entering into the possession of funds, meaning entering into the possession of funds means that you have an account, or you have a payment account or an account where you are storing the funds when they come from A and they go to B, then of course I would say not directly, but as I said, you always have to look at the entire service provisioning in order to be sure that there is not at one level financial services which is provided, then it could be out of scope. But it really always depends on how it is structured and where the fund flows go. For payment services, for example.
Very good. Thank you, Nadia.
So shall I go?
Yes, please.
Move on. So and as I said, as soon as you're providing a financial service, you need an agreement, you need an authorization. And this has also, and what I just exposed here has also been confirmed several times by the CSSF, where the CSSF and the regulator always says that even though the product as such is not directly regulated, you should look at the activity which are related thereto. Or relating here for the second example here on the slide for the ICOs, or relating to the creation of tokens and the collection and raising of funds. That's what the example we have now is the NFT and with the exchanges. You have to think about if they are not subject to any regulation or authorization. Okay. And when you look at what we have done now in Luxembourg, and thank you, Jean-Baptiste, for saying that 7 years is already huge experience in crypto. But what we have done in Luxembourg 5-6 years ago, the way we proceeded at that time is also confirmed nowadays by the upcoming proposals, I would say. I would then here again take the second example where in the MiCA regulation, you have to assess yourself when you are providing a financial service, whether your service and your product would fall under the new MiCA regulation, which is specifically for crypto assets, or if it would fall under the existing regulation for financial instruments, for example, or for electronic money, or for and there is really a requirement in that regulation telling that you have to do the assessment in order to consider why you consider that your product is not a financial instrument, is not electronic money, is not a deposit, or is not a structured deposit. So it goes in the same sense. You have to do this assessment, and according to that assessment, according to those conclusions, you would then in the next future, or either fall under the MiCA regulation, which is specific for crypto assets, which will not be regulated by the existing regulation. Another point, another step now after 7 years, I'm very glad to see that too, is that progressively there is the confirmation that and here the first bullet here is on Article 6, which is going to amend the directive, which is going to confirm that the definition of financial instrument will also include the instrument which are issued by means of distributed ledger technology. So we are really in that process, but nevertheless, in that process, you always have to question yourself whether or not, or what category, and that will not stop, what category afterwards your product will fall in order to know what kind of regulation to apply to it. So I don't know how much time I have left. Maybe Anthony can help me with that. Anthony yes. Left.
No, I'm here. So you have how much time do you need? 10 more minutes?
On the last slide. So maybe then yes. Just explaining what the consequences would be if you are afterwards regulated. So we heard that and Jean-Baptiste and Rikia confirmed that regulation gave them a lot of comfort and guarantee, and also allowed them to enter into professional relationships with institutionals, and also to be able to be competitors of them. So I would say if I would not be scared about regulation, I would really be in favor of it, in favor of regulating my product. And fulfilling the requirements, because it is for sure a guarantee, because regulation has, as a consequence, of course, is that you need a certain substance to do your work. Once you are in the regulated world, you also need to have capital requirements in place, which those capital requirements are assessed on an ongoing basis. So the regulator will not allow your capital requirements go down once you are down under a certain threshold once you are authorized. It brings also a lot of work, but it is, I would say, and I always say, if you have a good skeleton and healthy skeleton, then the body works and the body can run. If you have a very bad skeleton and with some lacking points, then of course the body is a bit maybe blocked to run too. So you have to put these policies and procedures in place, AML policy, risk assessment policies and procedures, and also, of course, you have to lay out your business according to those policies. You will also be linked to be bound by reporting requirements to the regulators in order to, and you will have monthly reporting and also quarterly reportings. And of course, you have different liabilities. So yeah, that's more or less in substance, in general, an overview how to set up a business. If you have questions on the last slide or on the other slides, don't hesitate to ask me questions. It's easier than to have a monologue here, specifically because I see myself talking here with my hands, quite disturbing. So yeah, so if I have questions, go on. So I would say, as a conclusion, the most important thing is to really, when you're setting up your business and when you are drawing your business model, is to identify whether or not you are in any of the regulated frameworks, and then to, of course, that's really important, then also to align your product to the requirements, which is not always negative. And here again, I would take Jean-Baptiste and Rikia as an example. With these requirements, your product evolves. It's not always a barrier for your product, but as soon as you have this, as you try to find a way to align your product to the regulatory requirements, it also allows your product to evolve and gives you a safer and more secure product. It might be blocking point for competition at the beginning, but as what we have seen now with the example of the exchanges who don't exist anymore over the last years, on long-term performance, it is an advantage. So that was my conclusion.
Very good.
Still a bit, as you can see.
Nyamke, you have a question, I can see. Can you please express yourself?
Hi, everyone.
Please go ahead.
Yeah, thank you very much for this. It's very interesting. And I have a question. My question is, if your product or your service does not interact with any fiat currency, but we are only within cryptos, am I obliged to have an authorization from CSSF or the financial minister, or I can just operate without the authorization if I don't interact with fiat?
So at the moment, when we come back to the first slide, then you have to ask yourself the questions, will you be a virtual asset service provider or not? And then you have to rely on the law, which obliges you to fulfill, to comply with AML requirements. And then at least you need to be registered, depending on what kind of crypto service you are providing for, you need to be registered with the regulator. And you need to also to submit a request for registration to the regulator.
Okay, so in any ways, I need to request the registration.
Yeah, if it falls within the scope of the law, you at least need to, and you want to provide those services in Luxembourg, and it is not a payment service, then you need to ask for the registration, yes.
Okay, thank you very much.
Welcome.
Nadia, just on that, I think the complex, at least for us as an exchange, is that this registration is not passportable. So it's not like, you have it in Luxembourg and you can operate everywhere in Europe. So the challenge here is really to, if you want to operate like in, let's say in France or Italy, Spain, everywhere, you will need to some extent, because some countries are still in the process of contemplating what they want to do for this specific registration. But if you want to operate a bit everywhere in Europe, you will need to have a registration in each of the country where this is required. I don't know how many countries it is at the moment. I think it's probably like 18 or 19 countries where registration will be necessary.
Yeah, I agree. That's why I said here in my slide, there's no cross-porting, of course. It's quite unusual in the financial sector to have a requirement which is not passportable, or registration which is not possible, but maybe because we are only at the registration level, and that yeah, I hope that one day this will evolve too, and we go over to passportable registration, or maybe then a license. But with MiCA anyway, most of those activities will also fall under the scope of MiCA, and then of course the activity will be passportable. So that I would say the latest the line would then be at that moment.
Very good. Nicolas Marinier, please.
Yeah, just had a question to say. We were talking about level playing field, sorry, but isn't this a bit the other way around? That if you don't have a passportable authorization or registration, this is actually a disadvantage for you compared to the other service providers of non-crypto, isn't it?
At this stage, you can have both arguments. You can say it is a disadvantage, but at this stage, you're still not as those actors still do not fall on a fully fledged financial regulation as all the other financial actors, and that's why they have some safeguards, additional safeguards in place, where the consumers protection and investor protection is given, and the financial stability is given, and that's why they have this passport. This I would see this as a first step to get those providers into at least the first urgency was, and I see, and you can maybe not reject that we have seen a lot of money laundering and also it has been misused. It is a pity, but it's always like that. They are quite professional at looking to bypass existing regulation to do their business. So. And that was, I would say, the first concern of the FATF at that time and Defi at that time to get it at least in some regulated. And that's what we also did in Luxembourg in 2015-16, just saying we need to at least be safe on that side. And that's why we need to ask them to do AML. And the best way to do it was to enter them into the payment, to take them into the payment scope. But as I said, the next step is going to be MiCA and the further a larger framework for those actors. And then I would say that the passport will be there, and then we will have a level playing field.
Understood. Thanks.
Nadia, maybe just one quick question from Bitstamp. Based on your experience, how long does it take in Luxembourg, to get the VASP registration? I mean, it's for the benefit of probably a few of the players who are contemplating maybe a VASP. Is it more like 6 months, 9 months, 12 months? It depends. Yeah.
It's I don't know. I'm not at the place where I could give you. Where I could give you guidance on that. What I heard about the market is that.
Yes, I can hear. Are you guys done?
Anthony, is jij aan de show?
So it's been to all of the remaining people, pleasure to have you with us. We have our second episode.
Anthony, you're not muted.
About 2 weeks time.
Anthony,
to go to our channel.
I forgot the question. So yeah, the timeline. So what I heard from the market outside is that it is a process, and it depends also on the quality of what you're handing in, on the understanding of the requirements. And I heard something about between 4 and 8 months now.
2 minutes. Thank you. Thank you.
That's only. I think the CSSF is somewhere here. I don't know if they are in my work group, but they were at least in the audience. But yeah, but it's always, you can never give a. Yeah. It really depends on the different.
On the quality of the fine. Yeah.
Even nowadays, I tell that when my customers ask me how long does it take, even at my stage, it depends. If we are diligent and we do give all our efforts to something, then it can go faster. If you are less diligent. But it's on both sides.
Yeah.
Okay.
Yeah. Thanks. Yeah. Thank you.
Sorry.
Very good. So are there no other questions anymore? No, very good. So yes, please.
Anthony, sorry. I think Aubin has one, the last one, if I'm not mistaken, in the chat.
Yes, please, Aubin.
Yeah, hello. Thanks, Nadia, for all the explanations about this topic. I may have two questions. The first one is for businesses or organizations as a whole. If they want to, let's say, use crypto services, crypto-backed services like payments and so on, are they obliged to use regulated VASP or any regulated intermediary, or do they have the freedom to use any kind of
So your question is, if I am an institutional and I want to deal with some of those?
No, if I'm a simple business or non-for-profit organization and I want to use payment services using crypto, do I have must I use a regulated VASP within the country where I'm registered, or am I free to use any kind of platform from another country or something like that?
If you are a non-regulated business and you want to use such services, my recommendation would be use the services of regulated guys, because the unregulated guys, you are really not sure what service you get, because the objective of the regulation is that you as a consumer or user or investor have the protection. At least you have a protection. You have a framework you can rely on. They have requirements, and that was my last slide. They have risk requirements. They have safeguarding requirements. Most of them. They have governance requirements. So it is really very important for them to have a good governance. A good business is always linked to good governance. If you have a bad governance, the business is going to be bad. And at least they are assessed on that, and they are also eager to have those on the best levels. And so my recommendation would be to rely more on regulated ones, specifically on the WASP now, because that's really an obligation. And the one who want to just circumvent that obligation, I would just question myself if that's a good business partner.
Sure. I mean, if you are, let's say, registered in Luxembourg and you want to use a regulated intermediary which is not registered in Luxembourg, but for instance in Germany or in France, would it be a problem for
no, as long as he
no.
If he's regulated in Germany by the BaFin, or that's as long as he's regulated, I think that's a good argument.
Okay. And the second question is about code governance. Are there any requirements for registered VASP regarding governance?
Yeah, there's also, when you look at the regulations, they have to provide for a set of rules and procedures which are assessed. Those rules and procedures need to comply with a certain set of requirements, and also to have a certain standard. So yeah, they have to. That's the reason for that registration. They have to comply with a set of requirements. All of the policies and procedures have to be compliant with the laws and the regulations, and also they have not only the obligation to have a policy in place and the written procedures in place, but of course they also have the obligation to follow those policies and procedures, and they are also assessed on that.
Very good.
They can be supervised. They can also be. They will have on-site visits. So I would say it's an additional guarantee if you contract with those people. Then even though I agree also, it's a lot of work and it costs a lot of time and a lot of money. But as I said, for me, it's good governance is always already a very in a long-term perspective, the best way to take it, to go for.
Thank you.
Very good. Thank you so much for Vauban. Thank you so much.
Assets and to operate them safely. So essentially, we are offering our service. We have more than 50 enterprise customers around the globe. We have offices in Luxembourg, in Singapore, and Taiwan. And we are typically offering services to custodians, fund managers, asset managers, spot, cryptocurrency exchanges, OTC exchanges, any company who is either working purely crypto native company working purely with crypto assets, or traditional financial companies who want to start investing in the crypto space and they want to start managing their own assets, we offer them the technology turnkey solution to manage them securely. So today's workshop is going to be focusing on different points. I want to highlight first, we want to review together how safe is blockchain, what are the conceptions and misconceptions of the blockchain safety. Then we will go through the private keys concept, which is kind of the most important concept of the key safety, on the digital asset safety when we are managing digital assets. And then I would like to introduce what we call the wallet operations concept. What is it and how is important to blockchain and crypto asset management? So first of all, let's take a step back. Let's see how Bitcoin, cryptocurrency, is becoming a trend in the market. We've seen an increasing adoption from different actors. So decentralized finance, DeFi, NFTs, these type of new products are becoming more and more important. Just give me 1 second. I'm going to try to minimize this. All right. Let's go ahead with that. We are working already, regulators are of course increasingly being involved in the economy. There is increasing regulatory clarity, which is inviting more and more institutional players to jump into the space. And even governments are now either adopting cryptocurrency like Bitcoin in El Salvador as a legal tender, or they are starting to evaluate or issue digital currencies issued by their own central bank. So we are seeing a very clear trending of institutional and mass adoption of blockchain. But before jumping into the swimming pool, should we consider first if it's blockchain itself? So this is a question to the audience. Do you consider yourself that a blockchain is safe? Maybe you can type your answer in the chat. We can see those answers, what people feel. All right, just a few seconds. So I think there will be yes, no's in the audience. So first of all, we know that blockchain is actually a distributed ledger. So this means there are different records that are distributed into different publicly available data sources. Those records are immutable. This means that once those transactions have been published to the blockchain, they cannot be altered, they cannot be removed. So they will be there for everyone to see forever. On the other hand, we know that everything that is published to the blockchain goes through consensus algorithms. This means everyone agrees what's published, which transaction is accepted into the blockchain. And all of these security points are enforced cryptographically. This means that there is no way to tamper with them once everything is published, right? So from this point of view, we could say that blockchain is fairly safe, right? So the infrastructure of blockchain is fairly safe. However, if you have been in the crypto space for as far as few months only, especially if you have been a few years, you might know that there are constant issues, security issues, right? So potentially we see recent news and old news of crypto exchanges or asset managers being hacked, some hackers just jumping into the infrastructure and stealing Bitcoin and different cryptocurrencies, right? So I would like to highlight a few cases that really bring the attention the lack, or I would say that the lacks of blockchain security, specific blockchain security issues, right? So the first one is just happened not long ago. It happened just this summer. One Japanese crypto exchange, Liquid Exchange, got hacked. The hackers just got access to the wallets of the crypto exchange, and they were able to manage to steal 100 million in crypto funds. The second case, this is an infamous case. It happened in 2019. In this case, Quadriga CX CEO, this was another exchange, and all of the user assets were held together under a single, I would say, series of wallets. And the only manager, the only people with access to those wallets was the CEO of the company. So when something wrong had to happen, it happened. So this CEO was on travel, and he infamously passed away. There is a lot of controversy about that, if he really passed away or not, but let's stick to the facts. This person passed away and took with him all of the secrets. No one locked away all of the access to the private keys and the funds to all of the users of Quadriga CX. So 190 million were locked away. None of the users of Quadriga CX could access to their funds any longer. And finally, this is also very recent. Last May, another platform, Coinbase, they received a phishing attack. Phishing attack, this means some of the users receive malicious emails trying to bypass the security, trying to retrieve the user authentication and passwords of those users. And they managed to somehow get the credentials of 600 users. How many funds were stolen has not been disclosed, but we know that 600 users were affected. So some attackers licitly access to Coinbase platform with the stolen credentials of some licit users. So we are seeing that these three different problems actually have different roots. The first one, liquid exchange, where the hackers just access to the cryptocurrency wallets. It was an asset custody problem. What was the security of the assets? What was the security of those wallets who were custodying the assets? The second problem in Quadriga CX, where the CEO passed away and locked out of everyone of their own funds, it was an operations problem. No one else had the access. There was not an equivalent, an alternate path to withdraw, to manage the funds that this person was operating. And in the third example, it was an authentication problem. Coinbase was not able to discern that those malicious users accessing to the platform were not actually the real users. There were someone else who was supplanting the identity of the real users, right? So this leads us to the question: didn't we say that blockchain was safe? What are the problems here, right? So essentially, we can summarize. There are a few problems. I mentioned authentication. I mentioned management, but the core problem is that blockchain security does not include the private keys management. The private key, and I will explain what private key concept is in a second. This storage and this management, the responsibility relies on the private investor or in the service provider who is offering the investment services to the retail customers. So this is the key, and this is a pun intended, this is the key of all of the problems. So before going any further, let's take a look what the private key is and how it's related to cryptocurrency itself. When we are speaking about funds, we speak about crypto funds, we speak about cryptocurrency wallets, and we're speaking about private keys, right? So I would like to first go ahead and introduce what's the cryptocurrency wallet and what the private key is. Cryptocurrency wallets have been designed with a concept of a cryptographic concept of public key infrastructure. In this cryptographic concept, there is a piece of information that is publicly available for everyone and a piece of information that is private and only known by the owner. So cryptocurrency wallets use this concept. So we have in one hand a public address to receive the funds. This public address, think about it as an email address, think about it as an IP address. This is a piece of public information that you share with your contacts, with your wife, with your friends, or with someone who needs to make a trade, needs to make send you some crypto funds, some cryptocurrency, Bitcoin or Ethereum, right? You will share this public address. On the other hand, your cryptocurrency wallet will also include a private key to sign the transactions. This is a secret piece of information. This is a number of is a series of random numbers. You can see the last line of this slide. It's not too attractive, right? This is a public or a private key format, you can see. So how do you keep this information, the private key safe, is essential of the security of your cryptocurrency wallet. We are saying that everyone you want to send funds, everyone you want to send Bitcoin to your friends, you need to sign a transaction with this private key. So that's the piece of information you want to take care the most. So just let's sing that information, let that information sing for a second. So we are saying that the private keys are actually all I need to send funds to my friends. If this means that if I lose the private keys, I cannot spend my money, I cannot send money to my friends. But that also means that if someone steals my private keys, they could use my wallet to send monies to themselves. So this is not like a password. Private keys are not a password that you can reset if you lose them. If you lose the private keys, you are losing the access to your funds. If someone else is accessing your private keys, they are getting access to your funds. So this is the whole, I would say, secret, the whole core concern of custodians and how to keep your assets protected. So before going to see what different mechanisms or platforms you have to protect your asset, your private keys, let me ask you first, how do you use your crypto? What are your different usages of crypto? Maybe you can type some of them on the chat. So potentially you are going to be either investing, you might be trading on a daily basis, on a weekly basis. Potentially some of you might have bought some Bitcoin and okay, I'm going to wait for 30 years or 20 years or 10 years and let's see what happens, right? So all of these operations are actually, I would say, divided, right? You can hold those assets for a long term. You can even stake on top of them, right? You can invest those assets. You can use them for your internal company treasury. You might make payments of crypto, pay salaries on crypto. You might also trade on a, for example, cryptocurrency exchange, or you can even be working with automated trading. So all of these, I would say, operations have different requirements and they have different frequencies. We are seeing that holding, it's I buy the crypto and I leave it for 30 years without doing anything with them, to automated trading, which is essentially sending transactions, few dozens of transactions per second. So that would be high frequency versus low frequency. And this is gonna also condition it what are we looking for our crypto storage solutions, especially if you are a company. If you're a retail, an investor, individual investor, you might manage with some of the basic solutions, but if you're a company and you're holding the assets of your customers, this is a key point. So you typically want to evaluate these three parameters. In one hand, you have convenience. The other one is security and the enterprise features you can use. So for convenience, there is a solution in the market. There is a solution, there are the hot wallets. The structure of these hot wallets is that they are essentially connected to internet. So they are really convenient. Whenever you want to send a transaction, you want to spend your Bitcoin, your hot wallet is in your mobile, is in your computer. It's connected to internet, so you can immediately send that transaction. The problem with convenience is that it lacks security. The same way you are connected to internet to send the transactions, the hackers are connected to your computer to steal your private keys. So whatever comes with convenience sacrifices in security. On the other hand, we have cold wallets and their older brothers, I would say the hardware, the HSMs, the hardware security modules used by companies. The security provided by cold wallets is the isolation. So isolation means that these private keys will be isolated from your computer, from internet, so they cannot be accessed from outside. So this comes as a compromise of convenience. Every time I want to connect, every time I want to sign a transaction, I need to take access to that private key that might be stored somewhere safe. I need to come to a whole process connected to the computer and then sign the transaction and send it. If I do it once per day, once per week, it's fine. But if I need to do this 30 times per second, how do I implement that process? That's what's lacking also for enterprises features. There are then some intermediate wallets, I would say. Exchange are providing some type of virtual wallets, virtual balances. They are either using, hopefully not hot wallets, or cold wallets to store their retail user, the end user wallets, their end user balances. Same goes with custodians. But they typically are focused either on trading or safekeeping the assets, and they do not offer proper enterprise features. To do that, and this is where there is a new set of companies within Cypabo is one of those companies that we are leveraging new cryptographic techniques to bring the convenience of hot wallets together with cold wallets, with the security of cold wallets. This is based to latest cryptographic developments, and this convenient balance between the convenience and security allows us to develop, on top of the custody infrastructure, enterprise features like approval chains, like other transaction limitations that help us to be targeting and to provide help for enterprise requirements. So let's take a look. How does a secure wallet look like? What do we need to take care of in case we want to protect the custody, to protect the digital assets, especially if we are a company? So in one hand, and this is what everyone knows, we of course should keep the key safe. So secure key custody, but then there are a few other concepts that are being introduced, especially when you introduce automation or frequent transaction. The second point is secure wallet operations. How do you operate those wallets securely? And then how can you enforce the authentication? How can you make sure that the user who is operating the wallet is who is claiming to be? So the first point, secure key custody. What the latest development has allowed us to bring this security with convenience, I would say, balance. These are the different, I would say, cryptographic development that has happened in the market recently, right? So multi-party computation, what we are doing is we are splitting a single private key into different key shares that are shared in a shared responsibility model. Not one single key holder will be hosting the key. It will be a shared infrastructure. And then these are essentially relying on cryptography and essentially in software. So we need a software development module or approach in which we can make sure that no hacker can compromise. So this is following a zero trust approach. None of the components of the custody platform will trust any of the other components. So we are always non-trusting all of the rest of the components in the equation. Second point is the wallet operations. So to think about the wallet operations, I think we can first think about, okay, what do I want to do with my blockchain, with my crypto, right? So typical questions are, and if you're working with a company working with cryptocurrency assets, you might face these questions every day. Who is able or who has the permission to initiate transactions? Who is involved in the approval of a transaction? Can we enforce, does it exist an approval process for triggering a transaction? How we enforce it, how we make sure that the approval process is performed properly? To who can we send transactions? Can I send to anyone? Can I send to my own private wallet? Is there any transaction limit for my specific wallet? And then can I automate this process? And we can even go one step further. How I make sure that the wallet I'm sending the transactions to is not related to terrorism, fake deposit, hacking, or money laundering, right? So these are all of the operation pain points that companies are facing nowadays. So we can summarize this into three big concepts. The first one is the segregated user roles and policies. We want different users to be able to perform different actions. Some users can trigger transactions, some of them can approve transactions, some of them they can do anything, just see what happens in the wallet. Those user roles belong to what we call the wallet policies. Wallet policies include, other than the roles, the approval chain, who can we send transaction to, how much transaction can I send, how much money can I send every day per wallet, and how we enforce that. That's the wallet policy enforcement. And then we have a third level, which is compliance, how we make sure that those deposits, those withdrawals, have a proper money laundering monitoring or fake deposit monitoring. If we gather all of these three concepts with how we can save the gas fees, how we can automate those operations, how we can make everyone accountable, that's what we call the secure wallet operations, or wallet ops for short. That is some focus that you need to put also if you are operating at an enterprise level, different cryptocurrencies. So let's recap for a second. We were speaking about secure key custody. We're talking about secure wallet operations 1 second ago. And then the third point is strong user authentication. If you remember the Coinbase access, someone stole the credentials of different users and they were able to illicitly and undetected access to Coinbase platform and withdraw the funds of the illicit users. So we need to make sure that the user who is accessing the platform, especially in the enterprise platform, is who is claiming to be. So for that, we need to, again, rely on the zero trust approach. We don't trust the device that the user is using to authenticate. We don't trust the keyboard the user is introducing the different secrets. And for that, we need to also implement that via multi-factor authentication. We can't just rely on password and email anymore. We need a third-party authentication to make sure that the user is who is claiming to be. So the combination of these three concepts is what is going to be helping you keep your assets safe. Key custody, secure wallet operation, and strong user authentication. So before moving on, before finishing, I would like to give you an example of how a safe environment look like, or how in a safe environment we could move crypto assets, how we can send transactions. So we would divide this into different steps. For example, one would be transaction request. Before sending any transaction, we must request that transaction. Then we should go through an approval process, and then after the approval process, then we will execute the transaction. So for the transaction request, we first need to authenticate the wallet operator. We have here a wallet operator. This person has only the role of sending transactions, of initiating transaction. This transaction will need to be approved by someone else. He cannot approve transactions. So this person needs to be properly authenticated. He or she will be able to initiate the transaction. And before initiating the transaction, before sending this to the approval, a proper custody environment, what we'll do is we'll make sure that the transaction matches the policies in place. Is this transaction being sent to someone we trust? Is this transaction within the wallet limits, the transaction limits? Is the approval chain going to be enforced? And then is the outgoing address related to money laundering, to terrorism financing? So all of these checks belong to the wallet operations and can be evaluated before even going to the approval process. After everything is ready, then we can move on. We can go through the approval process. If you see this structure, actually, we have a 3 level of approval. And then each one of the levels have different approvers. And you can actually configure, in an ideal case, you can have like 2 approvers approving, two out of 3 people approving one transaction in different levels. The whole idea of this approval process is that there are different paths for a transaction to happen, and everyone is involved. So with this kind of redundant approval process, we would be able to avoid cases like the Quadriga, where one single operator, one single owner is exactly holding all of the private keys and all of the access to the digital assets. If that person is the single point of failure, goes away, nothing could happen, right? So with this case, you still make sure that there is an alternate path for approval. And then after you enforce this approval, gathering secrets of the properly authenticated approvers, then you can send the transaction, execute it, and sign the transaction with the private keys and broadcast it to the blockchain. The last step is optional, but is also you want to people involved in the wallet to make sure that they are aware of what's happening in the wallet. So you can always notify all of the stakeholders in the wallet. So this is how ideally a whole proper transaction process would look like in a safe wallet. So just to summarize what we are doing, essentially what we have reviewed today is that the digital assets are operated via private keys.